What's up, everyone? All right, well, I'm wearing all black here today, and I'm mourning the loss of normal markets. This has just been totally crazy. Today, market down almost 6% at the open, bounced back up, and then during the White House press hearing or press briefing, whatever it's called, rolled back over and ended up halting down 7% for 15 minutes. It opened and came back down a little bit more. My biggest winners today were trading the S&P 500. It's very unusual for me to be trading the S&P, but that for me was what was working. My trades on APRN, Blue Apron, a couple of really nice trades, but you got to watch out for that stock because it will punch you in the face when you blink. And it got me yesterday, and it got me twice today, so I'm red on it. There were a couple other small caps that were good and I made some money on, but what really saved the day today was trading the S&P 500, which is far outside my typical wheelhouse. But this is a market right now that is giving us the opportunity, if you are interested, to venture a little outside your comfort zone and test the waters on some of these large caps or indices because they're so volatile. On a typical day, the S&P 500 wouldn't move enough for me to make enough money on it to be worthwhile. But on these days, it's moving a lot. I mean, up 6%, down 6%. It's crazy. I do feel like the last few days have been a little stressful just because of the few surprises of all of a sudden taking a quick 50-cent per share loss on something and then having to spend time trying to either recover that or just accept that I'm red. And I think that tomorrow and Friday, what I'm thinking is that I want to kind of focus on precision, and rather than taking a ton of trades, really just take a breath for a moment before the bell rings. I know what my A quality setups are. Wait for something to start moving quickly and then buy the first pullback. If I can make $1,000 or $1,500 or $2,000 in the first 30 minutes with precision, I'm going to walk away and I'll just trade for half an hour. Because today I'm up $2,900, but again, I spent a lot of time sitting in front of the computer. I was green, then I was red, then I was green, then I was red, then I was green, then I was red, then I was green. Yesterday, I did the same thing, but I ended red. And it feels like this is a market to survive till you thrive, because it's just crazy right now, and things will return to some sense of being normal. But if you can just get through it, that's the first thing. If you can get through it and make some money, that's good too. And I've been making money over the last 9 days, but minus the loss yesterday. But otherwise, it's been green 8 out of the last 9 days. So, I think that right now trading less is better, even though it feels like there's a lot of opportunity and that I'm leaving money on the table. I think that if I can just get in there, get a little piece of profit, and then walk away, I'll be better off for it. So I'm going to try to do that tomorrow. Don't hold me to it. I may, but that's what I'm going to set my intention for. And hopefully we have a couple of good stocks like we had today. We had 2 great ones today. One was up 350%, another was up 150%. So some great small caps, and then some good action on the large caps. So very interesting day. But as always, if you have questions and comments on today's recap, leave them right down below, and I'll be back at it first thing tomorrow morning. All right, everyone, so we're going to do our recap here for today. What a wild day in the market. I've got APDN up right now. No trades on it. I was just watching from the sidelines. Halted once going up, second time, third time, 3 halts in a row going up. All I can do on this is watch from the sidelines. I'm not going to trade it. S&P 500, weak. Pre-market, the bell rang, it started to squeeze up, and we had a couple nice trades on it, and then rolled over here, and during Trump's press hearing, White House press hearing, we actually halted going down. So market halted for 15 minutes as it was down 7% right here, resumed and came all the way back down to 228. Really big drop. So today was a continuation of kind of wild trading on my part. This is where I'll sit here at the end of the day, up $2,970.67. The majority of my profit came on SPXS, which is shorting the S&P 500. And I shorted that right here, actually, for this flat bottom breakdown, right here. So I was holding into the halt going down, and on resumption, I covered I sold for profit as it was dropping right here. I had a couple of other trades this morning, and you can see my biggest loss was on APRN. I was super, super frustrated after that loss. APRN this morning, I mean, it's unbelievable that I managed to be red on it, even though it is currently up 127%. But this was how I traded it. So out of the gates, it was a gapper, and it was the second leading stock on our gap scan next to BMRA. BMRA, I'm up 2,700 on. Some nice trades on this, and a beautiful break of VWAP right here that I did quite well on. So BMRA I did well on. We'll cover that one in a second. APRN, so frustrating. Right out of the gates, my very first trade on it was a long right here, the break over 940. I got in right here thinking that this was about to break the $0.50 of 950, and then we would red to green and squeeze up to $10, which was the pre-market high. I was wrong. It dropped down to 880, and I stopped out for a $1,600 loss. And I was just like, man, this stock is not easy, because it got me yesterday. It got me badly yesterday. So then it comes back up right here. It comes back up right here, and I was like, all right, forget it. I'm giving it another shot. I got back in right here and stopped out a second time. You got to be kidding me. Down $1,900. It then comes back up, and as it breaks 950, I got back in a third time, but with small share size because it had gotten me twice in a row. And I was like, I'm going to go back for a third try, but I got to take it easy on this. Got back in for the third try. It squeezes up to 990 and then drops all the way back down to 880. I managed to make money on it, but at that point I was like, I was just feeling really frustrated. Comes back up right here, and as it breaks 10 right here, I was like, all right, I'll give it a stab. But again, this stock is just so choppy, I got to go small. Small size stab right here, made some money. All right, it doesn't really pull back, it just kind of squeezes up, but I made some money right there. I was still red on the stock by about $600, but I at least was making back some of the loss. Then we got a break right here, as you can see, and let's pull this back out so we can see all the way to the top of this move. All right, so this is the very top of the move. So I got back in it right here for the break of 1550, and that was picture perfect. Squeezed up to a high of 1608. As you can see, we had a 5-minute circuit breaker halt. It resumed and surged up to 18. It did a pullback. I added right here. Now I started trading with larger size. I was green, back to green on the stock. And right up here, I took my last trade and I added. I went long, anticipating the break over 950. This was the second 1-minute pullback after the 5-minute breakout. The first one was right here, and this was the second one. I bought 3,000 shares, and then it dropped to 1750. And I lost everything that I had made on it. and was down $5,000. And I was down $5,000 on that stock. On the day, I was down 3,200. And I was just like, man, all right, I got to step back. I got to walk away. So that was at, what time was this? 11:59. So that was so frustrating for me. To have the right idea early on, to get chopped out twice, and then really a third time, then finally to have it break out, but not trade it with big enough size that I made decent money. Then to get back in here, have a nice trade, finally break a 1550, a beautiful trade, and then that last trade. And look, you can see in this 1 minute candle, this dropped from a high of 1925 to a low of 1750. So it smoked me out the same as it did yesterday, and I just am going to be ashamed at how I traded this. So I was up about $2,500, and then was down 3,200, which is, it's never fun to have that type of swing in the P&L. And from there, I was like, all right, well, I was red yesterday. Now I'm red again today. I'm not even, I was kind of like, I'm not sure what to do. I had another trade on GRIL, Grill. I lost on it yesterday. I lost on it again today. My trade on it was right here. And it, of course, ended up coming up and squeezing all the way up to 510 a little later, but I didn't trade that. One of my nice trades, AGO, $870. I said at a certain point, I was like, you know what? I'm going to step back on small caps. Now, meanwhile, I did do well on BMRA, but I was like, I'm gonna focus on the overall market. Let's watch APDN here. APDN just resuming from the halt, 725. The first halt going back down. Look out. It'll most likely gap down. I'd probably be, short bias up here, if I'm going to be honest. Because if it halts going down, it'll most likely gap back down to 6. Halt levels at 630. So, anyways, just focus on something else. So, AGO. So, AGO, this ended up being a nice bottom bounce trade. So, let's look at the 1 minute. A couple nice bottom bounces on it, actually. I took this one right here. So I was just looking for the first candle to make a new high. It's a bottom bounce setup. And I jumped in right here at 1746. It popped up to a high of 1838. That's $1 a share. Made $870 on it. Nice, clean trade. COF. This was another bottom bounce. I lost 368 on it. I took a stab. My first stab on it was right here, and I was wrong, but it did end up bouncing. I was just a little early, so I cut the loss quickly, and I didn't get back in. Let's see. VIX, NCLH, NCLH, that was another bottom bounce attempt. VIX, I took a couple trades there. Unreal action on VIX as the market was selling off from 71 all the way up to $78 a share. Really incredible. I had a trade on it earlier and then I didn't go back for it. So let's look at SPXS and SPXL. You can see I'm green on both of them. So this was trading the S&P 500. S&P 500 is the symbol SPY. And out of the gates, the first trade I took was long SPXL. I was expecting the market would bounce out of the gates. And on that very first trade, I actually made $1,000. So SPXL was the first trade out of the gates. I was long at 21.30. And so we can go back to this, back to the open. So I was long at 21.30, which was right down here. And we got a nice squeeze here all the way up to 22.86. So that was my first trade right out of the gates. SPXL. It was very clean, nice trade. I then switched gears and traded the small cap stuff. I traded BMRA, I traded Pixie, PIXY, GRIL, APRN. And then while Trump was doing his White House press briefing, I was watching the overall market. And so what I was doing was I was looking at the market right here, and we had this bottom that was kind of forming right in this area. And so I was like, all right, what's the level here? So I was like, the level is kind of around 237.50. So over here, the market came back down and tapped 37.58, bounced up off that level. And right here, as it started to roll over, I was like, all right, now we've got a very clear, well-defined flat bottom. This is a flat bottom setup. The market's at the lows. Trump's doing his speech, and the market seems to be not taking it well. So I was like, all right, I'm gonna buy SPXS. So when I buy SPXS, it goes up when the market goes down. You can see it's up 23% today. So I bought SPXS, and the market drops right here, and then was halted for 15 minutes. Halted on a market-wide circuit breaker halt because the market was down more than 7%. So I was holding the trade. The market resumes, pops up for a second, and then flushes down. I sold for profit. So during that time, SPXS was a flat top breakout, as you can see right here. And I was in at 24.44. And then we got the drop here on the resumption, and then that squeeze all the way up to $25. Then what I did was I switched gears and pulled up SPXL, because I was like, all right, at this point the market sold off quite a bit. And I bought SPXL at $19.06. That was right here as it was bouncing up. This ended up being a very well-timed entry on the bounce, as SPXL bounced all the way up to $20. I did, however, earlier have a loss on SPXL, which was right here, where I actually went long. I thought the market was about to bounce right here, and I stopped out as it dropped right here, and I gave back what I had made on it in the morning, and it actually went red on SPXL. So I wasn't picture perfect today. And in terms of over trading and sort of following the rules of max loss and things like that, we're definitely in a market where if I stick within the rules of my typical momentum strategy, especially for small caps, which is trading stocks between $2 and $10 generally. The only stocks that fit into that category today was BMRA until it broke 10, PIXY until it broke 10, which was pretty impressive, GRIL, and that was it. So two, so that's $3,000 of profit. And then this gives back $1,200, so about $1,800 of profit on stocks that were within my wheelhouse. But it's challenging because I feel like on the one hand, this market is giving us an opportunity, if we're interested, in branching out a little outside the strategy, which would be to take trades on the S&P 500. Given the fact that we're seeing record amounts of volatility and high amounts of volume, the patterns that we typically would only trade in small caps may resolve better in the S&P than on an average day, maybe 3 months ago. So the only thing is that it requires getting to know some of the financial instruments like S&P, SPY, SPXL, SPXS, and learning how they trade. Or the VIX, and learning how the VIX trades, and how sometimes the VIX trades not directly inverse to the market. It sort of diverges and does something a little different, which can be difficult. Or perhaps that this is a good opportunity to sweep up a couple bottom bounce trades, like I got on AGO, and this, I mean, honestly, my bottom bounce on SPXL was from 19 up to 20. This bounced from 14 up to $19. So choosing a stock for a bottom bounce, you don't necessarily have to trade the market. You could just look at which of the stocks on our scanner are most extended to the downside, and then choose a bounce based on that. And that may, in some cases, be easier or better than trading the overall market. But the one bounce I tried to take on NCLH was a lower price stock, and I was like, oh, I think this Norwegian Cruise Line Holdings might bounce here. That was down at 795 right here. You know, and at that point, I was like, this thing is really extended to the downside. I mean, it really looks like it's gonna drop, but you know, it dropped more. So I was too early on that, and the market started to pop, but this just really, I mean, it popped a little bit here, but not as much. So finding the right stock can be a little bit challenging, and I think that right now there is an opportunity to refine your skills as a trader by trading some of these things that typically you probably wouldn't look at, but right now are providing some really great setups. APRN, AHPI, some of these are higher priced, and I've done pretty well on some of these higher priced stocks. Look at that breakout there. I mean, that's a nice break there of 17 all the way up to 20 bucks. So some of these have been working out really well. I think one of the challenges definitely is that when they start to get extended, you can lose track of how big the spreads can open up on these and how quickly they can whip against you and go red. So some of the higher priced ones can very quickly turn into big losses. Remember yesterday, what was it? BX, what was the one I traded yesterday? BX, I can't remember the symbol. It gapped up again today. I don't know, I can't remember the name. APDN, let's see. Yeah, that's pretty extended for sure. Anyways, some of these higher priced ones can just be BNTX. Let me try that. Yeah, so BNTX. This one ended up hitting $104 today. Unbelievable. BMRA squeezing back up. Yep. So look at that. So our high a day on this, that popped there to 1040. Boy, let's look at that on the 1 minute chart, because that looks nasty. It popped up to 1040 and then flushed down to 9. A lot of volatility. And today I started green on SPXL, and then I went red on APRN and was down $1,000. Made my way up to $2,500, and then was up $3,300, and then was down $3,200 thanks to that loss on APRN. From down $3,200, I started working my way out of the hole, taking trades on the S&P, SPXL, SPXS, and now I'm up 2,900. I would say that it's been a little bit of overload, the way I've been trading the last few days, trying to trade the S&P, trying to keep track of SPY, SPXS, SPXL, keeping an eye on the VIX, VXX, SVXY, staying tuned for the press hearings from the White House, watching whichever small cap may be moving, like Blue Apron, APRN, BMRA, Grill. You know, there's so much moving right now that it does feel a little overwhelming. And I would say today, you know, if I could have made my $2,500 which I was up 2,500 before that last trade on APRN, and just walked away, on the one hand, I'd be up almost the same as what I am now, except with less time in the market. But on the other hand, I would have missed the really good opportunities that did present themselves on the S&P. The drop here, the flat bottom breakdown, and then the bounce off the lows. Those were two great opportunities. The challenge with continuing to trade longer and longer into the day is that with every trade you take, you are exposing yourself to risk. And that trade that I took on, I don't know where it was, I can't remember now, but wherever, somewhere in here, or up here, I guess it was, thinking the market was about to bounce. I mean, just like that, I jumped into it, and then with these, I've been generally starting with 2,000 shares and then going up to 4,000, 6,000, or up to 8,000. And just like that, I was down 40 cents. And I was like, oh my God. Just like that, I went from up 2,500 on the day to break even. And, or whatever it was at the time. You know, I mean, it's crazy how fast that can happen. So, whew, I don't know what the right thing to do is. I think that generally I have found that I do better when I trade less, but it's been a little bit hard to find clear direction today, just because, or these last few days, just because there have been so many different things moving. And then when I get red, I'm like, well, I'm red. Okay, I'm down $1,000. I know there's going to be more opportunities, so I just have to dig in and wait for something to pop up. And I was able to dig myself out today. Yesterday I couldn't do it. Yesterday I closed down $1,600, but today up $2,900. I don't know. I'll look forward to markets that are a little bit smoother, just because this has been so volatile. It's not that I don't like volatility, because I do. It creates opportunity, but there's so much opportunity right now and so many things moving that it's hard to know which one to focus on. And sometimes VIX, you know, all of a sudden makes a huge move like it did here today. It just totally opened up. And while this was happening, the market was dropping, but this was going up much faster than the market was going down. And then notice here, the high on VIX was at 115. Let's look at the low on the SPY. The low on the SPY was at 230. All right, so we had, this was where VIX peaked. So then when the market rolled over and actually went to the new low, VIX didn't go back to new highs. So it was a divergence there. Those types of things can get very frustrating when you're like, what is happening? I am trying to trade the VIX. The market is hitting lower days. Why isn't VIX going up? This doesn't make sense right now. And sometimes it doesn't make sense. And it's challenging. So it's a lot to watch. I mean, between on this side of my monitor, I've been, so let's see, this side over here, I've been watching SPY and SPXL, and then I switch between SPXL and SPXS, 10 second, 1 minute, 5 minute. Trading the 10-second chart on the S&P 500 is ridiculous because it's so choppy. But when you're looking for a bottom bounce, it can help give you that early indicator that the momentum is starting to change. Over on my other chart on the left, you know, here in this moment, I have it also on SPY and VIX, but I'll switch this between VIX, and then I'll look at TVIX, and then I'll look at SVXY, and then sometimes I put my SPXS chart here, or I put one of the momentum stocks, the small caps. You know, it's a lot to watch, and look at that, back to highs. I'm regretting downsizing my monitors a little bit, just because this has been a market where I feel like there's something that I could use that extra monitor space, but typically I really don't need it. And I think that the other side of it is that What is it really worth it? Is it really worth trying to watch 17 different charts and 17 different level twos? I was up 2,500 this morning after 30 minutes of trading, and then I went back to the well that one extra time. So then I had to spend the rest of the morning digging myself out of the hole, and that's not always a good thing to do, because you can start to get emotional, you can start to get frustrated, and you can dig yourself a bigger loss. That's what will happen most of the time, especially for beginner traders. I'm at a level in my own trading, and this afternoon I didn't trade in the chat room, I traded by myself. Because I knew that the strategies that I was trading were not the typical strategies that I trade on a daily basis. They're not really a good reflection of the strategies that I teach. I've been trading for a long time. I have some intuition about what will happen, and sometimes I'm right and sometimes I'm wrong. It's risky stuff. And so I kind of was like, you know what? I'm just going to trade on my own for the next couple hours. So I finished in the chat room down after that last trade on APRN, and then I traded S&P to make it back. But typically that's not something that I would trade, because it's outside my strategy. It takes a lot of money to trade it. Most of my trades today on SPXS and SPXL, I was maxing out my buying power. So I was putting a lot of money into the trades, and it doesn't really feel super worth it. I'm really just mostly bummed out that I screwed up ARPN, APRN. That's the one that really disappoints me, because I just, but some stocks, all they want to do is, take you out behind the barn and punch you in the face a couple times. And then it's just unbelievable how choppy some of them can be, and how frustrating it is. And then some stocks are easier. It's like you just sort of learn that some are cleaner. The breakouts are more predictable. And APRN, although it had a couple of nice breakouts, it had a couple of really nasty drops early in the morning when I was first trading it, and then right here, and then right here, and then here, and then, well, this wasn't as bad. It did retrace the whole thing, though. It came back below VWAP. It's tricky stuff. So it's definitely a market where, and then this is one other thing that I'll add. One last thing that I'll add. I have been going back and forth between, is it the right thing to be trading as actively as I'm trading? Because I'm getting in, getting out, getting in, getting out. And sometimes I look at these and I'm like, man, look at you. You were in this thing down here at 10. The thing goes all the way up to $18, $19. And I got in, then I got out. And I got back in, then I got back out. Then I got back in, got back out. Got back in, got back out. Then I got back in, and then lost $5,000. Or it was even more than that. It was like $7,000. And on the other hand, if I just got in and held, how great would I be? And so I tried doing that on a couple of trades, on SPXL and SPXS. I tried a couple, not as much today, but more yesterday, where I was like, you know what? I'm going to get in, and I'm just going to let this thing work. I'm going to set my stop, and I'm going to walk away. I'm not even going to look at it. I'd come back and realize that it had popped up 30 cents, 40 cents, and with 6,000 shares, I was up, $1,200, $1,800. And then it came all the way back down to break even, and I got out flat. And that happened several times. Up 30, 40, 50 cents, back to break even. Stopped out flat. Back up, back to break even. Back up, back to break even. So I was like, forget it. Screw this. I'm going to get in. I'm going to take my profit. And then I'll get back in if I see another setup. Because although on the one hand, it feels like it's less aggressive to just take one entry and just hold it and let it ride, I think it's more aggressive because you're hoping for a home run. And most of the time, in most markets, we don't get home runs. We get in, we're up 20, 30 cents. It's the right thing to do to take that money off the table. And if the thing rips up another 40, 50 cents and then pulls back, fine. I'm willing to get back in on the next pullback. One of the things that is usually a good idea when trading that type of strategy is that as you're getting in higher and higher and higher, you reduce your share size so that you don't end up with 3,000 shares at 1933 and then losing $1.50 a share or whatever it is. That because that's where you get into trouble. And that's what happened to me today. And the reason that happened was because I was all of a sudden like, wow, I'm making my money back on APRN. I am doing really well here. This is awesome. I'm gonna step up a little bit for this last trade because I think this thing's gonna rip over 20. And with 3,000 shares now, I'm gonna get a nice $1,600 win, and I'm gonna be walking away up, 4,000 or 5,000 on the day, and then all of a sudden, pull a rug out, and you're holding a big position at a really high price. So, what I usually teach is to scale down after those first trades. And sometimes I do that. And sometimes I do the opposite. I scale up. And I'm like, well, I'm up 2,500. Obviously, the stock is moving quickly. I'm gonna let this ride a little bit. I'm gonna throw a bigger position on and see if I can get a 50-cent, 75-cent winner. And sometimes I'm right on my timing, and that's how I turn a day that's up 4,000 to up 12 or 18,000 or higher. And sometimes I'm wrong. And today on APRN, I was wrong. And on BRMA, fortunately, I was right with the places I did it, and I was able to have a couple of nice trades. Look at how many things are popping up right now. So overall market is bouncing. SPXL is going to be bouncing as well. SPXS is dropping. We've got 5 minutes to the bell. Realistically, right now, the S&P is a green doji, high volume. This could be, a reversal point. We'll see. Higher volume in SPXL. It looks more like a reversal in SPXL because the volume peaks here. If volume was peaking like that in the S&P, I would be like, this might be a bottom. But it's actually on lighter volume on the S&P. So we'll see. I'm not going to swing trade anything. I'm not trying to be a hero. I just want to make my 2,000 a day and, keep on grinding. So that's the game plan. Easy does it. This has been a tricky month for me. I had a rough start the first few days, and that's how it goes sometimes. I would say trading, again, it's in a lot of ways it's an easy job. I'm sitting in front of the computer. I don't have to be out working in the sun or anything like that. But on the other hand, it can be very difficult, and the markets can be irrational longer than you can remain solvent. And if you are not tight about keeping your stops, you can't just say, screw it, I'm just going to hold APRN. Because if I was still holding this, if I played that game, if I said, you know what, screw it, I'm not selling this for a loss. I would, there's no way I'm going to sell this for a loss. All right, well, now I'm holding 3,000 shares down $4 a share. I'm down $12,000. Now I'm a bag holder. And that's how bag holders are created. It's when you get so stubborn that you're like, forget it. I'm down so much, I can't even bear the thought of selling it. I would rather hold it for the rest of my life. and that's emotional, and I'm not going to say that I haven't been guilty of that in certain instances, but I cut my losses. The problem for me is that I cut my losses, then I look back, like let's just say APRN. Let's just say on this trade, for instance, I took a giant loss. Let's say I got in here and what did it hit? 1544 and then dropped back down to 1277. So let's just say I lost like 10 grand on that. I would have taken the loss. And then when it came back up here, even maybe when it came back up here, I might have gotten back in, then lost a second time. Or not gotten in on this and just been livid. And asked myself, man, would it have been better if I just held this thing, the whole time? But statistically, that's not the right. I know that that's not the right way to do it. You got to cut your losses, and if you're in a loss that's bigger than you thought, your share size was wrong. And that's one of my sort of, biggest mistakes, is that I size too aggressively sometimes, and I get myself into a big drawdown. And this is my strategy of trading. I'm aggressive. I focus on small caps. I focus on stocks that have the potential to go up 300, 400% in one day. This is up 346%. I don't usually trade the S&P, although today those were my biggest winners. But, I trade these types of stocks, and it comes with a territory that sometimes when you're trading these, you're going to end up buying it at the wrong spot, and you don't want to hold something that's up 300%. You got to cut those losses and then, come back in for the next try. But the approach of trading these types of stocks has been, in my experience, the right approach for growing a small account. I literally turned $500 into $53,000 in December, right? I turned $583 into over $1 million. And it was trading stocks like this. Of course, there will be some red days here and there. And on those days, I may end up feeling frustrated and feeling like I just kept buying the tops and getting faked out. But the green days, over the long term, have always made up for it, and they will. Fighting FOMO is it's a tough one, especially when we have some big movers like these. But yeah, look at PIXY. When this halted coming back down, I don't know who was buying up here. I hope that it wasn't. But it may have been someone who gave into FOMO. Maybe it was a short seller from down here covering, but someone pressed the buy button up here, whether it was a cover or a buy. Either way you look at it, it was probably a loss, which is disappointing. I try to capitalize on the FOMO that's in the market by riding momentum and riding stocks when they're irrationally strong, and sometimes I do fall victim to it. So it's kind of the way it goes. All right, you guys. So I hope you all have a great day. Enjoy the rest of your afternoon, and we'll be back at it first thing tomorrow morning. All right, see you guys later. Bye, everyone. Hey, did you know every morning I go live to stream my pre-market watch list? Subscribe to the channel, press the alert button, and you'll get the notifications. And if you want to learn more about trading, check out the links in the description. And if you have questions, post them in the comments, because I personally respond to every comment posted on my channel.